Welcome back to BestProp4U. Today we are focusing on EURUSD, which is putting in a massive rebound. Third day of a green candle. And this breakout is actually fundamentally driven by a repricing of ECB rate hike expectations. And the catalyst, of course, behind that is oil. With Middle East conflict intensifying, Barclays has issued a note warning that Brent could hit $150 a barrel before the end of the year if tensions persist. Well, now if this is happened, the ECB warned in its latest projection that an adverse scenario with oil near 120 would cause materially higher inflation, and would be looking, of course, now at a scenario where investors have completely thrown out the dovish tone from the ECB's recent Sintra forum and are now pricing 70-25% probability of a rate hike in September. Deutsche Bank also called for a September hike. Actually, they think it's a done deal. So this hawkish shift is what is fueling the euro rally. Let's do the technicals. Well, the breakout on the daily is important. Third day, consecutive day of gains. We are above 115. We might come back lower by the end of the day, but if we do maintain 3 days in a row of bullish price action, then essentially this could extend higher. What is probably slowing us down right now, because on the RSI we do have actually room to go further up. What is slowing down in the 100 Fibonacci extension from the bottom, because our bottom is at 113.30 and the 100 Fibonacci is at 115.12. Important to remember, we did price action wise break, of course, that trend line, left it below, left it behind yesterday, but we haven't yet broken above this trend line that connects the other two peaks. And this suggests that a move up to around 116, which is also a high momentum candle open over here, is possible, given, of course, we again have room on the RSI. Now let's see where this level might be interfering with some sort of Fibonacci resistance. Well, look at this. The 50 Fibo is actually around that level, around that territory. So this is something that we definitely need to pay attention to, because in the end, if the 13.2 breaks, okay, the next level will be the 50%. And if we don't get above that, we're either going to see a pullback and further continuation or a full-blown reversal, because the 50 is actually the important level. It's where sentiment shifts. So remember these levels, because they are very important. Now, dropping down to the 4-hour chart, we are seeing a much more expanding Bollinger Band range over here, with the median line also looking up. This is a scenario where this is a decent breakout. Okay. What else we do see, importantly, from the low, we see a 5-wave move to the upside. So in order for us to understand whether this 5-wave extension has found a peak, perhaps for now, is to use our Fibonacci extension tool. We can use the net distance through waves 1, 4, which of course is from there to there. And look where we came. We came just above the 61.8. We failed the 100%. However, if we use a typical, because we're still doing the 5-wave, if we use a typical 1-2 wave, we see that the third wave ended around the 200%, which means the fifth wave should go above the 261.8, even close to 3 perhaps. And it's why in Fibonacci terms, we might be seeing this particular pushback for now at around 115.30. These are important levels to remember. Why? Well, because the 200 specifically also comes in aligned with the previous peak. So if we do stay above 114.77, 114.80, this is considered to be a bullish signal. Apart from that, obviously, if we are doing now the 5th wave, it means that we should expect a correction, especially since we've actually reached out to around 75 overbought on the RSI. So how are we going to do this? If we assume the bottom is in, we're looking for the 38.2, 28.6, 23.6. These are the levels to take into account in case, of course, a pullback takes us below the 114.83. Why? Because the pullback will stop being a pullback at 0.38 at 114.67 and will become perhaps a dip if we go lower than that, close to 50, perhaps 61.8. Now the 61.8 is quite an important level because it comes in with the 100 Fibonacci extension here. So this is an important cluster. Now, could we see a dip down to 114.23? It is possible. How likely it is, in my opinion, because this is a fundamentally driven breakout and technically driven breakout at the same time. I think the chances of us to go even to 38.2 are not so good for the moment. Okay, for the moment are not so good. Obviously, an end of day trade may be a good idea here for those who want to take the risk and go short. But as long as we remain above 114.83 and above 114.67, this bias, EUR/USD bias, remains upwards. On the 1 hour, we're going to identify further levels that might be important for us. And of course, one of the more important levels is the mid Bollinger Band, which is sitting around 114.50, not far from 114.57. Okay, and importantly, as I said, we are dealing with a 5-wave leg to the upside now. Okay, so if this ends up being closing back inside the Bollinger Band, it might be the leg that is going to come lower down. However, here we just want to observe momentum. The 1 hour Bollinger Bands are tilting aggressively to the upside. All of the Bollinger Bands are looking up. And this is what's confirmed a very decent breakout with no signs of slowing down just yet. Now, another trick I want to tell you about. This is the 1 hour candle, and it's actually a Marubozu candle. Okay, you might be familiar with this. Similarly, we got that here. We got a slight pullback and all the way up. Now look at this. If we stay above the 50% of that, which is at 115, then again, this can go higher. Might have more legs up, even as a 5th and final wave, before we see a deeper pullback towards the middle Bollinger Band at 114.52. So if we get a pullback into that support zone that holds, it presents a solid opportunity to catch the next leg up, targeting 115.80, 115.50 initially, 116, 116.30. Just keep in mind the macro context. Where is the close back above the 100 Fibo level at 115.30? If this momentum dies and we lose 114.50, we could quickly find ourselves falling back below that macro level, which is down at 113.60. So trade safe and watch those all headlines.